Hi, I'm the Managing Director and CIO of Right Horizons PMS. I come with over 3 decades of investing experience and have been also a contrarian investor looking to take advantage of market cycles, both for ensuring that you manage risk as well as taking advantage of market opportunities that come up. The Right Horizons Group has been around for over 18 years and manages assets in excess of 2,000 crores across the group entities that we have. I would like to introduce you today the RH Flexi Cap portfolio from the RH PMS stable. I'm supported by 2 co-fund managers, Prabhat Ranjan and Vijay Chauhan. Prabhat comes with a CFA charter and 5 years of experience in leading corporates. Vijay also has BTech from IIT as well as an MBA from IIM and has some experience prior to joining RH as well. Both of them support in the fund management of the RH Flexi Cap strategy. The RH PMS is a boutique investment management firm. We manage over 600 crores of assets across a number of strategies. Our objective is to give a range of options for client to choose from. Our investment philosophy is to look to deliver a superior risk-adjusted return to our clients through a robust risk management methodology, through a structured investing process, and with in-depth fundamental and quantitative analysis. The RH Flexi Cap portfolio is meant to be an all-weather fund. We look at the various market cycles, and that has been a strength of Right Horizons. Across decades of experience on market cycles, we are able to look at what point to invest more into large caps and as well as what point to look at investing in mid caps. We also calibrate the risk that we take. For example, if we looked at it just before the COVID time, when we found that market valuations had gone very high, we went defensive. We took cash calls. We also ended up moving out of financials as a sector, and we got into pharma. This helped us deliver strong returns in a market which was very volatile, and we came out as one of the leading funds on the PMS side, all India, in this period. The good part is, subsequently, when markets did fall, we also deployed that money, increased our risk levels, and so in the next rise that happened post-COVID, we also participated very well. So we were able to capture both the upside as well as the downside for clients well, and this is how we look to deliver a risk-adjusted return to our clients through the RH Flexi Cap portfolio. Our investment management process is broken up into 4 parts. The first is the RH screener, where we screen companies from the whole universe and come down with a smaller list. The second is RH scorecard, where we rank companies across various parameters to come out with a score, which we then use to prioritize companies that we invest into. The third process is RH risk radar, which we actually look at the risk parameters at 2 stages, one before investing and one after getting invested into companies, where we track it for any deteriorating parameters over a period of time till we hold the stock. The last part of the process is RH pendulum, where we look at timing the purchase and the sales of the companies in the portfolio. And we do this because we also want to look at growth at a good value, so as to also manage the risk of the constituents of our portfolio. How do we invest into stocks? Again, there are a few pillars of how we go about it. Growth at a reasonable valuation is an important thesis of how we invest, and valuation becomes important for us to ensure that our risk is managed well. We are reasonably process driven, like I have mentioned. We look to invest into companies which we believe can also become multi-baggers in our portfolios, and these are the ones which give us the extra alpha in our portfolios. So we go deeper to see companies which maybe have a competitive advantage, companies which have good moats and help them manage versus their competition, companies which have a pricing advantage. We look to companies that can also become future leaders, and an example can be, let's say you have Asian Paints and you have 𝐻𝐶. Now 𝐻𝐶 may be a future leader, and when value unlocks from future leaders, you find that the multi-baggers evolve from such companies much better. While an Asian Paints type of companies may be ones that we hold for the longer term to provide stability, we add some of the multi-baggers or potential multi-baggers which can give us a large return and provide the additional alpha to our portfolios. Growth at a reasonable valuation is also an important factor for us. One example that we invested into was IRCTC. It had a dominant position, and they are able to have a very good competitive advantage, including a pricing advantage compared to any other operators. It's also in some form a quasi-government organization, and there is a steady flow of opportunities that come in from the Indian Railways to them. At the same time, they have very strong operating metrics which we like. The stock did well for us, and at one point of time it really shot up in price, and we found that the valuations were not justifiable. We actually exited it as a multi-bagger, and subsequently, of course, there was some bit of volatility that the stock saw, and it fell down, and it was good that we had sold out. So these are examples of how the company is important, and it needs to be in a leadership position or an emerging leadership position, but at the same time the price also needs to be right, because if the price is not right, you may find that a sharp fall may impact the client's portfolios adversely. We also look to invest in companies with good corporate governance, because we have found that if that is not there, you could see a sudden large price damage in case market comes to know of any activity that is detrimental to good corporate governance. So if you're looking for a portfolio that provides you peace of mind, and the fund manager takes care of all the allocation between large caps, mid caps, managing risk, and taking advantage of market opportunities, Right Horizons Flexi Cap is a portfolio for you to consider.